Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look again on the gold market. So as usual, we have prepared the fundamental view on the gold. This week we do not have a lot of new information actually. The major question, major concern that stands around gold remains. So this is some cold attitude of the investors to the gold market. So we do not see really big inflows of the money into the gold, even on the background of some news and statistics that makes United States dollar cheaper. And even on the background of the recent payrolls, we see drop of the interest rates and increasing of some even short position, although the changes are minimal, but we do not see any drastic change in the sentiment. The same we could say about based on the SPDR fund reserves. So this week, although the drop was minimum, but it has decreased. And that is a major concern for the gold market. With this sentiment, as you understand, we can't count on any significant upward action. Based on the opinions that we see on the market, provided by the UBS, by the TD Securities, some other big banks, it seems that investors are treating overall situation on the gold market in the long term. They do not pay attention to some details that looks positive in the shorter term. So some drop in the inflation, pull non-farm purchases, postponing of the tapering from the Fed, that is short-term positive factors that makes dollar weaker, but they have no effect on the gold market in general. So it means that investors mostly watching for the gold in the longer term perspective, and for them it's not very important whether tapering starts in November or it will start in December. It's more important that the tapering will start, and it means the changing of the policy. This is the first reason. The second reason, we have the alternative investors' objective. So taking the stock market with its dividend yield around 33% and on average, it's more attractive than to keep the gold. And with the postponing of the tapering, this provides more confidence to investing in the stocks. Yes, it be a bit more difficult. You need to be more selective in choosing the stocks, but still, this market is attractive. Potential rising of the yields, making the bonds also attractive. And, well, I think that all this stuff is pricing on the gold. As a result, for example, the UBS set the new forecast for 2022. They suggest that the average price of the gold in next year will be the 1750. So investors do not expect any rally, and it means that current upward action is very fragile. And most investors point on short-term destination point around the 1830, 1850. They treat it as a sale with the background that we have currently. Yes, on next week we will get some statistics. It will be important as the CPI report, as consumer confidence, retail sales. All this stuff will be important, and it could make impact on gold market. That might be supportive. But if market shows really weak reaction on the payrolls, and if even these numbers will be a bit worse than expected, hardly it will trigger really long-term rally. So maybe market will bounce up a bit. But I think that we should not count currently on very significant action. It means that currently at this moment we could use potentially 1830, 1850 area as a sale for the short term, although it is not yet clear what particular drivers will be that let market to reach it. But at the same time, on coming week, there's really big chances that we will see a bit deeper retracement on the daily chart. From the technical point of view, it's nothing wrong with the deep retracement, especially when it is forming after the first upward reversal swing. Actually, this is the rule of thumb. As I said many times, when you have downside action, first upward retracement with the reversal swing, 618 retracement is a normal. Usually, traders tell that buy the first ABCD after the reversal swing. And from the harmonic point of view, it also looks absolutely normal, as market could form here the reverse hand and shoulders pattern. That's actually the major pattern that we intend to consider on the coming week. Take a look what has happened recently. So first, this was a proper reaction on the COP target, as we said, and actually it is sufficient, as market already hits the 30% support. So usually it's enough for a COP, but release of the positive PPI numbers and high unexpected PPI numbers and high level of inflation in the wages that we got on Friday keep gold under the pressure, and it makes it form kind of the bearish flag that is forming. That makes us think that we could get deeper action right here. On the 4-hour time frame chart, it could mean that maybe, well, it is a bit early to talk about 1742, but it's very probable that we could consider 1762, 1777, so market easily could drop to the bottom of the confluence support. Besides, this level corresponds to the supposed bottom of the right arm on the daily chart. Yes, we have the divergence, but unfortunately, this is only the May City figure, but it has no real support on in the sentiment or fundamental background. Another reason why we think that market could take it out of these lows is the situation on the hourly chart. So take a look. On Friday we discussed the reverse head and shoulders, and everything was starting nice until the PPI has been released. And with this ABCD pattern, market wasn't able to reach the OP. It was not able even to climb to the major resistance that we have specified. Despite that, here we saw not bad actually thrusting attempts to go higher, but PPI absolutely crushed the market and dropped below the C point. It means that the hand and shoulders here is failed. And what does it mean? It means that market should take it out of these lows and keep dropping. So based on the performance on the intraday charts, we're turning or tending to idea that we probably should get another swing down on the daily chart. It means correspondingly that currently we suppose that it would be better to not take any long positions by far and wait when the market will hit major support areas. On the daily chart, on the 4-hour time frame chart around the 1760. That's the first suggestion. Second, speaking about the short position, well, it could be considered, but take a look. We have really tight area that full of the support lines. And once market's passing through the one support, it means immediately the next one. In this combination and in this situation, well, personally, do not feel any inspiration to make the bearish trade here and taking the short position and trying to just have the pumpy downside action on any support level that I could get. So for me, it's also not very attractive. I would consider taking the short position if we will see the failure of the daily pattern. So once market will start broken through the 1760 area and showing the failure of the hand and shoulders, which suggests the drop below these lows, that will be the point where we could think about the taking a short position. In the current moment, well, this will be not really pleasant trade to get. So that's our opinion currently on the gold market.